Hey everybody, it's Tim Talks Finance, and today I'm answering a really simple question. Should I sell my house now? Listen, I've been in the real estate industry since 2007, which is just before the great financial crisis of 2008. So I've seen quite a bit of ups and downs in real estate. So I figured what we could do is break down all of the aspects of real estate today for you, so that's what we're going to do. After all, Forbes is telling us that the market could decline as much as 20%. And the United Nations just warned that if we don't change course, we're heading into a global recession. Okay, so what does this all mean? And let's just break it all down, so that by the end of this video, you'll know whether or not is a good time for you to sell. And if you find this information helpful, can you do me a favor and hit the like button for the YouTube algorithm? It really helps out the channel and gets this message out to other viewers like yourself. And if you like this content and want to see more, consider subscribing and hitting the notification bell. All right, so let's get started with the big picture of the current state of the whole real estate, housing, mortgage markets as they are right now in 2020, 22 is we're currently in October of 22. Okay, so what exactly happened? We went through obviously a pandemic where the feds drove the mortgage rates down to the lowest rates that they've ever been to. In fact, they got as low as 2.65 on a 30-year fixed in January of 2021. 2.65. Now keep in mind that the Fed tries to keep inflation at 2%. Are they successful? Not often. That's their target range though, 2%. So they're giving out mortgage rates of 2.65%. Who wouldn't take advantage of that? That obviously caused a ton of people, drove people that were locked up in smaller places, and they had now the ability to afford something bigger because they had to stay at home. Most people were actually working from home during the pandemic. I'm sure you guys know that. So we had the biggest housing boom in history. Now look, here in Phoenix area, our prices went up 9.9% from July of 2019 to July of 2020. Then they went up 30% from July of 20 to July of 21. Then they went up 22.9% from July of 21 to July of 22. So in Phoenix alone, houses have jumped up nearly 50% in just 3 years. Now, let's check out really quick the mortgage market, because in 2008, the biggest factor on why the real estate market melted down was we had bad mortgage loans, tons of bad mortgage loans. So let's see where we're at now. We probably have tons of those, right? Because I always hear people say things like,
well, Tim, there's a ton of foreclosures that are coming up. 1.7 million people were on forbearance.
Well, I've heard that before, and I think that reminds me of when I bought my house. In 2012, I was looking. In 2013, we closed. But in 2012, I kept hearing people say, shadow inventory, don't buy. Houses went up a little bit, don't buy. Shadow inventory is going to drag the prices back down. It never happened, okay? That's how I feel about this forbearance thing that everybody's been saying that's going to drag the housing market down. I don't see it happening. It's just not the health of the market. All of the loans that we've closed in the last few years have been super high quality loans. All right, now in the time frame from 2020, 2021, when we had those super low interest rates that got it as low as 2.65, we did refinanced $6.9 trillion worth of mortgages, plus in that same amount of time period, we did 3.3 trillion worth of purchase loans. Now listen, total outstanding mortgage debts in America right now are about 12 trillion. Okay, so that means that about 90% of people who have mortgages are in the 2s and the 3s now. Since interest rates have doubled, there's going to be very little incentive for people to sell a home and buy a new one at a higher rate and a higher price. So sellers are going to probably have to get more aggressive, but we're not really at a housing crash yet. So what should I do if I want to sell? Well, I like to do what Benjamin Franklin did, and let's just go through all the pros and cons. That way you'll know what is the best idea specifically for you and your situation. Okay, so pro number one. Maybe you want to update your house or you just need a bigger house because your family is growing. Yes, totally a legit great reason to need to move. Number two, you want to move to get a better job. Number three, you want to move because of politics. Or number four, you have an investment property, but you have a lot of equity in that investment property. And right now with T-bills and treasuries giving out like 4% on these short-term, maturities, that's super, super low risk. With real estate being a lot higher of a risk right now, I wonder if maybe investors might want to take their money out of the real estate market and go park it in the bond market. Because if their cap rate on the real estate that they bought is 5% or less, then it might make a lot of sense for them to go ahead and just dump that money in the bond market, because you can literally buy a treasury or a T-bill right now, I think a 1 year for like 4.3% or something. So that would be a lot less risk for the investor. All right, so those could be some of the pros of moving, but if we have to look at the cons of moving, so let's look at it. Number one, the selling costs. Now, according to Dave Ramsey, right here on his website, could be as much as 15%, which is going to include everything from your real estate commissions to your moving costs, staging of houses, and things like that. So quite a few things to think about when it comes down to like the costs of selling the home. It's not just the real estate commissions. It's not just the closing costs. You have other things to consider like repairs, moving costs, things of that nature. Number two, con is uncertainty of outcome. What if prices of houses still continue to go up at a much slower rate? Freddie Mac actually thinks that they're going to go up about 3% per year now. So they're not even really predicting what I can see a 20% decline, but let's just say that Forbes is right. Maybe houses do go down. If you're still spending 15%, it might not make a whole lot of sense to take that much risk on 5%. But I'm not your risk advisor. You do your own risk analysis. I'm just trying to break down the numbers for you. For me, I have a family, I have 2 kids and a wife, so there's no way that it would make any sense for me to take the risk of moving out of this house where I've secured an interest rate at 2.2% and move my family to somewhere we might not be able to afford going into this global recession that the UN just warned about. Okay. Number 3, con. You might owe a bunch of taxes and you need to check with your CPA or with a CPA in this one. I'll also go ahead and put a link to the IRS website down below, so that way you could read it for yourself. You can actually just read the entire description and read the entire IRS tax code on capital gains, and maybe you can answer the question for yourself, but I highly recommend talking to a CPA to ask specifically about your situation. All right, number 4 con is mortgage rates have doubled and it doesn't look like they're coming down anytime soon. So if you're going from a house that you owe $300 on, you want to move up to something in the $500,000 range, where normally that jump might only be a 40% increase in payment. Now that jump might be more like a 70 or 80% increase in payment. Okay, so costs on monthly payment, costs up front. So a couple things to consider. Not everybody necessarily talks about this. Number 5, we have uncertain times right now. So going into bigger monthly payments is not a great thing to commit to. Even if you have stable income, I wouldn't recommend going into something that when we're in an uncertain time, when we're literally talking about nuclear wars and, pandemics and things that have happened like once in 100 years, right? So from the biggest financial risk that I see is that you could spend as much as 15% moving in order to save as much as 5% during the crash, but you're still taking on tons of risks in order to do that. I don't see that as being, even if Forbes was right and the real estate market went down by that 20%, I don't see that as being worth the risk of 5%. To me, it doesn't make any sense, but folks, I'll let you make that decision for yourself. Well, guys, I hope this helped. If you have any questions, feel free to reach out to my team at the link in the corner right up here. And if you guys know somebody that could use this information, consider sharing this video with them. All right, until next time, guys, have a good one. Like I said, if you want, consider liking, sharing, and subscribing. We'll see you next time.